Good morning and welcome to the market forecast. Friday, yes, finally Friday, April the 16th. I'm John Hoagland. Thanks for trusting me with your time. Another fine specimen of what markets do, how markets work, expecting a very interesting trading day today. As always, we're hoping for accurate context for you, good risk management, of course, and of course, always patience. As far as economic numbers this morning, the housing starts and permits came out both higher than expected. Kind of surprising with lumber prices these days, but hey, it's a good sign that the economy is continuing to move along. Consumer sentiment, Michigan consumer sentiment, is due out at 9 o'clock this morning. There's also a couple of talking Feds throughout the day today. Nothing majorly impactful is expected for the rest of the day, at least in known economic numbers. There's always the headline risks that are out there. As far as other news is concerned, U.S. stock indices set to keep the rally going as banking sector continues to open earnings season in a positive way. Morgan Stanley and PNC Financial both releasing their earnings this morning, both of them better than expected. Inventory numbers and rising geopolitical risks keep pushing crude prices higher. We're currently at a 1-month high. And unfortunately, as far as the vaccines are concerned, another kind of downer this morning reading that the Pfizer CEO has stated that there may be a necessary yearly vaccine booster for the COVID-19 vaccine that may be needed for years. Not that excited about that myself, but as long as we can get this pandemic under control, I'm okay with that. Blessings to everyone this morning. As always, make sure you hit that like button, share, comment, question, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can get notified when we do have live events. Looking early this morning, just a couple of minutes ago at the VIX, kind of a little bit higher, 1664, still very low. Dollar index down just a little bit, 91.58, and the 10-year yield continues to slide lower at 157. That 10-year had a nice big rally yesterday on the fact that those yields are coming off those recent highs. As always, I got to say hello to everybody. Good morning, Felix. First one in the room. You win the prize this morning. Ednelson, Joseph, Brian, my brother Rick, good morning. Theo, good to see you this morning. Bill, Shady Trader, good to see you. Nick, Art, Vince, JD in the house, the Dancing Bear. Chris, good to see you. Richie, Nemo, Mr. Shine's Mystery Channel, good to see you. George, Lamus, Rob T, and UG, good morning. Good morning, Oleg. So we're going to jump into the charts here, just kind of thinking about what's been going on this week. You know, crude's had a $5 move to the upside. Our equities have just been moving higher and moving higher and moving higher, eating shorts all the way. It's Friday. There may be some changes today. We're seeing some possible market state changes in a couple of these markets, and as usual on Friday, I'm going to see if I can't top off the week with a nice winning trade or two this morning and see if I can't call it a week early. If you've had a good week, please keep your powder dry. Don't wreck it all in one day. I know because I've done it. So, all right, let's take a look into the charts here now and see what we're looking at. As always, we're starting with the daily in crude. So, it is June is the front month this morning. Volume is much bigger in the June. Hopefully you've already switched over, and this is the June contract. The premium from May to June isn't that big, so I haven't really adjusted any levels because levels are more zones than anything else. Overall volume slowed in the overall. Again, that's not just the front or the next month. Overall volume slowed yesterday. Open interest suggests short covering over new highs. So not necessarily new buying coming in, but remember we are in rollover. So it's going to be kind of difficult to judge how how open interest is driving price, because again, a lot of that open interest is engaged in rollover. We got a $5 move to the upside all week, going from low to high. Just saying, could there be some potential profit taking today? It's always a possibility. Take a look at the 30-minute chart. We're just opening up. Let's see what we're seeing. So, hang on a second. So 64.10 is a previous weekly kickoff level from way back when. It's going to be interesting if the market does drive there. We're not going to be opening with a gap, and no real overnight inventory. So it's really kind of a question: are we going to try and continue to push higher, or are we going to reaccept in yesterday's range and possibly in yesterday's area of value? If that occurs, there's a decent probability that the move to the upside may push us back down to value low before finding any support and continuation. So we've got somewhat of a value area special situation play possible today. If we reaccept below value high from yesterday, and I'm going to say that was 63.52, if we show signs of reacceptance in value from yesterday, again, there's a probability that states that the market could go all the way back to the low of value at some point during the session. Rejection of ranges from the last couple of days. If we spend some time up here and build some volume, I would look for this market to look at overnight high and possibly this previous weekly kickoff 64.10 level. It's always fascinating. Markets move people and people move markets. We've been seeing the S&Ps and all of our U.S. equities really kind of ballistic to the upside. We're getting pretty close to a test of weekly kickoff high, which is largely based on a measured move. There's no past information up here with which to deal with. So we keep pushing higher. We've been pretty much higher all week. Again, look at the last 3 weeks. It's just been driving higher. It's been increasing in open interest. Volume has been holding up pretty well. My question is, when are we going to see the pullback? When are we going to see a little bit of a relief break from this? It just continues to eat shorts all the way up. Pretty decent volume yesterday on an up move. Not great, but decent volume. We added 28,000 in open interest. So there's still money coming into the market in the upside. It doesn't appear that we're all in here just yet. This is like the Energizer Bunny market. It just keeps going and going and going. Friday, again, we've been ballistic to the upside. Is there a possibility for a profit-taking event? It's always possible. Be careful, because those opposite moves in a ballistic market can be very vicious. They can be fast. They can be hard. Make sure you protect yourself from an event like that. Taking a look now on the 30-minute chart. So it would appear that we're going to be opening with a gap. So we have gap rules. This is going to be a fascinating study in how markets work and how people work within markets. I think that the weekly kickoff high is an important level. This 41.75 level here is going to be important. We've been pushing higher a lot for a long time. If we open with a gap, we're gonna play the gap rules. Whereas if we can't close the gap, we're gonna look for continuation to the upside, which could give us a true test of weekly kickoff high. If we can't get to weekly kickoff high, if we re-accept inside range and or value from yesterday, that may be enough to spark a little bit of profit taking. Could it be? Not sure, but just keep it in mind and always protect yourself. Look for opportunities where you're going to have the chance to get into a trade close to a point of invalidation. Our overnight high, weekly kickoff high, areas that we can trade close to points of invalidation. Acceptance inside of value, the high or inside of range from yesterday, another area where we can limit risk. Value high from yesterday, another area where we can limit risk. We're seeing the market starting to come off a little bit here before the open. We got about 20 minutes before we're going to open. Could this be an opening call? Could this be sellers maybe coming in to preempt a little bit of a push to the downside? Nobody knows for sure. But again, I'm going to be patient. I'm going to look for the right opportunity. If I miss something, it's okay. I know that over time I'm going to be okay. And don't be afraid to wait for a good trade location. It's so important, especially to me in a day like today. I think there's a lot of potential opportunity here today. And I've got to just be patient and look for the right opportunity. It's got to come to me. If I go looking for trades today, I know I'm going to find them, and I'm probably going to overtrade, and I'm probably going to chop myself up. So be patient. Look for the right opportunity for you. Always thinking in context. NASDAQ. NASDAQ is probably not going to be opening with a gap here. This is the 30-minute chart. Let's start again on the daily. So we've had 3 days, now 4 days with play on weekly kickoff high, big fat round number, 14,000. I'm going to put it a little bit closer to where it really is. And this is going to be pivotal for us today. Are we going to accept above this? Are we going to bring in new business, new longer time frame buyers needing to adjust inventory? Or are they going to reject this level, come back down below that level, and adjust inventories for a possible move back to the downside? That's why this is so pivotal here. Volume was pretty good yesterday. We lost open interest. Now, this is something that's interesting to me. The S&Ps have been adding open interest for the past couple of days. The NASDAQ has been losing open interest, indicating that some of the shorts that have been hanging in this market have been kind of getting out. They've been capitulating. They've been taking their losses. Short covering does take initiative buying power away from the marketplace. So if that's the case, and we're not seeing money coming into these moves to the upside in the last few sessions here in the NASDAQ, it's more of people getting out of shorts than actually getting in long. Now it's difficult to judge all that stuff, but these are things that I look at in the longer time frame to help me with that context we're always talking about. What is the context of the marketplace? In the NASDAQ, while it is the same, it is different. It's now put in an overnight high in the overnight session, an all-time high in the overnight session. Markets don't tend to like that. It doesn't have to get taken out today, but in future days here, it's more likely we're going to put in a high in the regular trading hour session. It may happen today. Here's the 30-minute chart. Okay, gap rules may be crucial today. We were looking at it this morning. It was looking like we may open with a gap. That probability is beginning to drop as we come off our overnight high back into range and perhaps even back into value. 14,000, an important inflection level, might be a useful level to limit risk. If we find support there, here we go. If we find support there, so be it. But it does allow you the opportunity to limit risk. Context is always on our mind. Risk management is always on our mind. And again, try and stay patient. If we get too deep into this value area here, I think that might again be enough to incite a little bit of profit taking after the ballistic moves we've been having to the upside. Now, again, NASDAQ a little bit different. We've been kind of range bound below that 14,000 level. We closed above it, which is a sign of acceptance. But are we going to maintain that acceptance today is really the question. Being a Friday, markets moving higher, possible profit taking. Even if I'm not participating today, I'm going to be watching these markets because I think the outcome of today is going to be extremely interesting. Now to the gold. We finally got to close up above this 1760 and 1750 level. This is a possible market state change for this market. We added 16,000 in open interest yesterday on higher volume. Money came into the long side. Longer, stronger buyers. Look at our low from overnight. Basically, weekly kickoff High, what was resistance becomes support. There's space above here. We've got some substantial space. I'm talking about up to over 1800. So there's some room for the upside here. Getting a little warning here on my stream, but we'll just press on. Down to the 30-minute chart. Okay, we had some overnight longs in this market. 1766.80 is settlement price. Price moved higher, more substantially than lower than the overnight lows. So we're looking at some longs here. The market opens, tries to continue to push higher. It's kind of stalled up here. It was not a very confident open just by watching it this morning. By confident, I mean it just kind of meandered up here for a while. There was no real directional activity. And again, with a substantial move, looking back to the daily here, with a relatively substantial move yesterday and upward mobility all week, we always have the possibility of some medium to short time frame profit taking. Right. And, with that potential new market state in gold, some of the patterns that we've been using to perhaps successfully navigate this range bounding activity here are going to change. It's difficult for people to accept new patterns, and they're always looking to lean on the old patterns. This move up above this level may change the patterns that we're going to be looking for our opportunities. The euro, I've been really kind of looking to try and stay long in this market this week after Tuesday, Wednesday, Thursday, after Tuesday's breakout above this weekly kickoff level. We talked about the fact that this area is going to be a little bit sticky, and we've been stuck in it for the last 2 sessions, including today. 3 sessions, including today, really. Pretty decent volume on this breakout here. We're maintaining volume. We added 500 in open interest yesterday, not a huge number. Take a look at the 30. Okay, we did not end up opening or maintaining any kind of a gap. We don't really have a lot of overnight inventory here. If I'm long, I'm probably just going to try and stay pat as long as we don't accept inside value from yesterday. So if we start to spend some time below 119.92, then I might be thinking of maybe lightening up or getting out of any longs that I may be holding. And if we can take out the overnight high, I think that there's, again, some potential space for us to the upside. We got to get past these recent swing highs up here around 2018, 2017 area. So it's going to be another interesting day in the euro, as they always are. These markets are so fascinating. So the 10-year, we've got testing of weekly kickoff high yesterday on some pretty decent volume, and added 15,000 in open interest. Okay, so that increase in volume and an increase in open interest means some more buyers came into this market yesterday, possibly some longer time frame buyers. We're seeing some resistance again here in the overnight session up against weekly kickoff high, which is 132 and 1930 seconds. Take a look at the 30-minute. Here is settlement. We closed right on the high of the day yesterday. Settlement 132 and 21.30 seconds. Holding some overnight shorts in this market. They seem to be continuing to get paid. I'm not looking for them to get nervous here. We're inside range and value in large part from yesterday. So try and stay patient. I'll be looking for highs of value from yesterday. We're working at the value low from yesterday, our regular trading hour session low, taking out the overnight low, which was basically value low from yesterday. So this area here is looking a little bit like maybe a target-rich environment in either direction, only because it allows us to limit the risk. In value, stay patient. Near the extremes of value, those might be opportunities for us. So yeah, it's going to be it's going to be another Golden Graham's day here in futures trading. We're looking for again some pretty decent opportunities, and even if you call it a day early, you have a good day. For whatever reason, you might call it a day. Today's one of those days where you just might want to hide your mouse in the drawer and just watch what happens. I think there's going to be a lot to learn from how these markets kind of resolve the end of the day here. It's going to be interesting. My brother Rick is pointing out, and very aptly, that trillions of dollars have been printed. Dollar value going down. More dollars needed to buy commodities, stocks, houses, cars. Inflation. We're seeing that in commodities. Certainly, it's going to be affecting us for a period of time. But the Fed seems to think that they've got the tools to try and keep inflation in check. And I guess we're going to have to find that out over time. And I have a feeling we are going to be. Vince Capria. Hello, Vince. Good to see you. How do you determine if you should trade the opening range, and how do you pick the direction? It's a great question, Vince. The opening range trade is based off of the range for the first minute of trade. Now, there's lots of different ways that people use the opening range trade. Some people look at the opening range as 30 seconds. Some look at it as 5 minutes. When you suspect stronger buyers or stronger sellers right off the opening, well, let's say we open outright higher and we create a gap, and we're looking at the market as a strong market. There's always context involved, but quite simply, that the range for the first minute of trade is here. Let's go back to the charts for just a second. So let's choose another commodity here. Let's look at. Well, we have crude oil open now, and it's maybe going to be a little bit difficult to see. But if the first minute of trade includes the regular trading hour session high, and we've opened at the high of yesterday's range, but we haven't been able to create a gap, that may be telling us that we may be seeing some sellers coming in to bring this market back into value from yesterday, which is quite a typical move. Okay, so we've got point of control here. We've taken the market back to point of control. If the opening range is the first minute, I'm going to let that first minute pretty much establish itself, and I'm going to put a stop to get short at just below the low of it, and I'm going to put a stop in to get long just above the high of it. When either one is filled, the stop is already in. You're looking for the opening range to remain one extreme or the other for the entire session. So if the opening range is the high in gold in the crude oil here, and we got short on that first tick outside of it below the opening range, that range of the first minute, we're holding on to shorts here that are basically paying us 20 ticks right now. And if the opening range remains the high of the session, it's going to mean that is going to be probably the best trade location. The nice thing about the opening range trade is occasionally, like in the S&Ps, you'll get a 6-tick opening range, which means you're only risking 8 to 10 ticks of risk to stay in the trade. And sometimes these opening range trades create really nice, big profit opportunities. Okay? All right. Vince, if you are more interested in more information on that and how you can kind of prepare yourself for these types of situations, come to the group coaching next Wednesday. I usually don't do this until Monday, but this is a link to a group coaching session that we have, that I have on Wednesdays. It's at 1:00 Wednesdays. Come join us. Ask questions about the opening range trade, and I'll be happy to go over it in a little bit more detail there. We're getting to about 4 minutes till the open. You guys are having a good conversation here, VP and Rick. The Fed is lying. Yeah, well, there seems to be maybe a lot of that going around. Not going to go there. What I'm going to do is I'm going to take my deep breath. I'm going to stay humble, grateful, and creative today. I'm going to be happy for the opportunities that the market gives me. And I'm going to be, again, having a nice, restful weekend. When you're done, just do something nice for yourself. We all work really hard at this. We deserve to do something nice for ourselves, do something nice for somebody else, and keep praying for peace. Get out there and profit today. I will see you Monday morning for the market forecast again at 8 a.m. Have a great trading day. Have a great restful weekend. Be ready for Monday. More opportunities yet to come. These are opportunity creating machines, and we should be happy to have the opportunity. I didn't realize I still had the charts on there. We should all be grateful to have the opportunity to partake in these markets. Have a great weekend. Trade well today, and I will see you on Monday. Blessings.